Hi, everyone. Hope you all are doing well. Welcome to the Q3 market overview. My name is Brett Sebion, and I am part of the Emerj360 team, a division of TrustPoint. As a reminder, your investments are managed by the TrustPoint investment team. As you'll see, the content throughout this presentation is TrustPoint branded. It was another good quarter for investors. Stocks and bonds were both up, and economic data continued to come in just right. Investors and markets certainly like stability, and 2024 has so far given investors what they want. There's been no major unexpected or shocking news for investors or the markets to digest. So we'll talk about how well markets have done in Q3 and also throughout 2024. So this is a chart of the global stock market. You can see 2024 has really been a great year. There's been a couple hiccups along the way, but all in all, a very positive environment for the stock market. And we can see that numerically here on the equity asset class returns. So global stocks year to date are up almost 19%. That's through 9 months. And then over the last 12 months, they're up over 32%. So not necessarily something we would expect year over year for markets to be up 32% over a rolling 12-month period. But nonetheless, markets have performed well. And we should take that as is. Fixed income markets have also performed well. You can see 2024, the price of global bonds has gone up. I do want to touch base a little bit on 2022. If we remember, the stock market was down and the bond market was down. It was a very challenging year for investors, and that was a function of higher interest rates. So as rates rise, bond prices fall. And when rates fall, bond prices rise. And this is a good story of how those two are tied together. So in 2022, bond prices went down, rates were moving higher as the Fed was increasing rates. 2023 and 2024, rates have came off their low, and actually the Fed just cut for the first time. And we'll talk about that a little bit in a couple slides. But numerically, again, we can see year to date, global and US bonds are up about 4.4% over the last 12 months. Global bonds up over 10%, US bonds up over 11%. So again, both stocks and bonds have performed well, and investors have seen that within their investments. So from a macroeconomic standpoint, we talked about how economies are performing well. Growth has remained resilient all year. And the data really in the third quarter was no different. But more recently, softer inflation data, softer labor market data have allowed long-term interest rates to drift a little bit lower, and also have allowed the Federal Reserve to start cutting rates. So they cut rates by 50 bips or 0.5% in September, after raising rates through all of 2022 and parts of 2023. And you can see the black line, the Fed funds rate had stayed at that 5 to 5.25% range for part of 2023 and most all of 2024 up until about a month ago. So where we stand today, the Fed cut rates by 0.5%, and it sits at that 4.75 to 5.0% range. The blue line is where the markets expect the Fed funds rate to be at the end of 2024, 4.25 to 4.5. So they are pricing in another Federal Reserve cut. And then the red line is where the markets expect the Fed funds rate to be by the end of 2025 in that 3.25 to 3.5% range. So we have started in this interest rate cutting cycle, which a lot of investors and definitely some businesses out there we're highly anticipating and definitely encouraging rates to come down. That's what their wishes were. But remember, just because the market is pricing in a certain number of cuts doesn't mean it's going to necessarily happen, even though we do expect rates to come down over the next 12 to 18 months. So some key takeaways, just to kind of summarize some things that we talked about. The world economy has been resilient. A recession is not imminent, and it remains our base case that the economy will most likely avoid a recession, and a soft landing is the most likely outcome. The risk-reward outlook between stocks and bonds is currently slightly in favor of equities. A lot of that has to do with the strong economic data, strong corporate profits, but also the broadening and participation amongst equities. We've seen emerging signs of the strength amongst the entire market continues to expand and be encouraging. But quality stocks and bonds are still being prioritized in portfolios given current valuations in both markets. So with that being said, at the end of September, we remained at our targets within the portfolios we manage for clients. So for example, if you are in a balanced growth strategy, we target 50% stocks, 50% bonds, and we were right at that target as of the end of September of 2024. Remember, we made changes in January and then again in March, but since have not made any changes through the end of September. So we still like the environment that we're in. We like the economic outlook that is being provided for us. And all in all, 2024 has been a strong year so far, not only in the stock markets, but also in the fixed income or bond markets. So I just want to say thank you everyone for watching. Thanks for being clients and trusting us with your investments. Please don't ever hesitate to reach out, whether it's after one of these market overviews, if you have any questions on the material that we covered or anything else that may be on your mind. There's always stuff going on, right? There's always questions, that I'm sure pop up, and we're happy to answer anything. So again, please don't hesitate to reach out. We'll see you at the next market overview, which will be in the middle of January. We'll talk about kind of 2024 as a whole, and then obviously anything specific that happened in Q4. So thanks everyone. Hope everyone has a good rest of the year. And again, please don't hesitate to reach out with any questions. Thanks everyone.